For the longest time, when you heard the name Eternal LTD, your brain probably jumped to two things, right? Huge spending and even huger losses. But what if I told you that whole story just got flipped on its head? That's what we're diving into today, the incredible turnaround of a company that was famous for losing money and how, somehow, it found a way to actually turn a profit. Yeah, this was the story for years. We're talking about the 2023 financial year. When you added up all the money coming in and all the money going out, Eternal was left with a net loss of 971 crore rupees. I mean, that's a staggering amount of money, but honestly, it was kind of what we all expected. It fit perfectly with their whole growth at all costs playbook. And then, bam! Just 1 year later, this happens. A total, complete 180. For the very first time in its history, Eternal posted an annual net profit of 351 crores rupees. Think about that for a second. That's a swing of over 1,300 crores rupees, from deep in the red to in the black, in just 12 months. That's insane. So that's the billion-dollar question, isn't it? How on earth did they pull this off? How does a company that was basically a professional cash-burning machine suddenly start making money? Well, we've dug into it, and it really comes down to three key strategic moves that made this whole thing happen. All right, so the first piece of the puzzle, it wasn't some flashy new thing. Nope, it was all about getting back to basics. It was about fundamentals. Before they could even think about expanding, they knew they had to fix the business that started it all, their core food delivery service. I mean, to really get Eternal, you gotta start right here with their food delivery platform. This is their bread and butter. It's a huge business-to-consumer, or B2C, operation. Basically, they're the middleman, connecting you, the hungry customer, directly with thousands and thousands of local restaurants, every single day. And the scale here, it's just immense. Let's talk gross order value. That's the total value of every single order placed before you take out any expenses. That number hit over 32,000 crore rupees. And that came from over 750 million individual orders. So you can see this wasn't just about getting big for the sake of it. This was about building a massive, stable, high-volume foundation they could really build on. Okay, and here's the critical part, the real pivot. They took this gigantic operation, which used to be a total cash drain, and they turned it into a profit engine. Just by focusing on being more efficient, it generated over 900 crore rupees in adjusted earnings. And look, that's not just some number on a spreadsheet. This was the solid financial ground they needed to stand on before they could take their next big, risky bet. So, with the food business finally stable and actually making money, Eternal was ready to roll the dice on its next big thing, a massive all-in push into the world of quick commerce. Yeah, if the food business was all about building that stable foundation, quick commerce was about strapping a rocket to the whole thing. This is the part of the story where their growth went from just steady to absolutely explosive. And this chart, wow, it just shows that explosion perfectly. The gross order value for their quick commerce side almost doubled in 1 year, shooting up to over 12,400 crore. We're not just talking about regular growth here. This is hypergrowth, the kind of growth that can totally change the entire future of a company. And what's really incredible is how they did it. They got all this growth without just setting piles of cash on fire. The quick commerce business actually slashed its losses and, get this, by March 2024, it hit profitability on an adjusted basis. That right there, that's the holy grail for tech companies, isn't it? Finding a way to grow like crazy and make money at the same time. But right when we're celebrating this insane growth, Eternal's own CFO throws a bit of a curveball. He comes out and says that gross order value, the exact metric we've been raving about, can actually be misleading. Now, that's a fascinating thing for a CFO to say. It tells you the company is looking past just the simple growth numbers. They're focused on something deeper. The big question is, what is it? Okay, so let's recap. They've stabilized their core business. They've lit a fire under a new growth engine. So, what's next? Well, the third part of their strategy is to move beyond delivery completely. Now it's all about owning the entire going out experience. You can really see how their ambition has evolved right here. Step 1 was delivering food. Step 2 was delivering groceries. So, what's the next logical step for them? It's to get you out of the house and become the one-stop shop for your entire night out. So, what do they even mean by going out? Well, think of it as a mashup of their classic dining stuff, finding restaurants, paying the bill, with their newer business for event tickets. The big goal here is to be the only app you need to open for your whole evening, from booking a table for dinner all the way to grabbing tickets for a show. And just to give you a little taste of the potential here, their annual report had this wild little factoid. Apparently, one customer in Mumbai paid a single dinner bill of almost 4 times lakh rupees through the app. Now, okay, that's obviously an extreme example, but it really shines a light on the kind of high-value transactions that are possible in this going-out world. So there you have it. Eternal finally hit profitability. Mission accomplished. Time to celebrate, right? Well, not so fast, because now they face that classic tech company dilemma. Do you sit back and enjoy the profits, or do you pour it all back in to chase even bigger growth down the road? This timeline really lays out the whole story. You see the massive loss in 2023, then the big celebration for the first ever profit in 2024, and then a dip, a projected dip. The forecast actually shows their profit is going to fall pretty significantly in 2026. So after fighting so hard to finally get in the black, why on earth would they let it just slide backwards? Well, the answer really comes down to one word: strategy. That drop in profit you see coming, it's not an accident. It's a choice, a deliberate one. They are choosing to take their earnings and reinvest them right back into their biggest growth engine, quick commerce. They're sacrificing short-term profit for what they hope will be long-term dominance. Now, this strategy is definitely not risk-free. I mean, just look at the recent changes to India's goods and services tax, the GST. In the short run, all that uncertainty made customers kind of hit the pause button on their spending. But long-term, Eternal is betting that the lower taxes will actually make the average order cheaper, which should, in theory, drive up demand. It's a classic playbook, right? Take a little pain now for a bigger gain later. And that really brings us full circle, back to our final big question. All the evidence seems to point to a pretty clear yes. Eternal has shown the world it can be profitable. But its ambition is so much bigger than that. They want to be an all-encompassing super app, and it really looks like they are more than willing to sacrifice the profits they're making today to build that empire of tomorrow. The only question left is, will the gamble actually pay off?